Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. Today is May 12th, 2025. And boy, that de-escalated quickly, didn't it? That seems to be the big theme today is de-escalation. There's great news everywhere. And look, I don't really do good news here. That's not how this works. This is a Perma Bear channel. How the heck do we do good news? Look, any way you look at it, there's good news in every corner of the world this morning. Things are actually going really well out there. Let's take the win, shall we? The world is stepping back from the brink in more ways than one. Where do we start? Obviously, the big news right now, the Dow is absolutely ripping 1,000 points higher ahead of the open, at least the last I looked. We've had a major breakthrough in talks between the U.S. and China. We were talking about this in the lead up to these talks last week. I had very low expectations for these meetings. I actually thought the whole reason the Chinese even agreed to the meeting in the first place was so they could just get up and leave. And for a while yesterday morning, it looked like that's what was actually happening. There was headlines that the Chinese delegation had gotten up and abruptly walked out of the meeting without explanation. And then everybody was like, no, they just went to lunch. They came back. So maybe the press was a little too eager to have that headline. So as the talks progressed, it was becoming clear by late last night that things were actually going pretty well, that this talks were productive, and that there would be a joint statement released in the hours ahead. And then it looked like around 3 a.m. Eastern time this morning, the joint statement by the U.S. and China was released, with all kinds of agreements on lowering tariffs, and the market just took off like a rocket on that news. Now, we'll get into the nitty-gritty, some of the numbers that are involved, but a substantial reduction in tariffs. I would put the asterisk next to it that this is temporary. This is a 90-day reprieve. Both sides are going to drastically lower their tariffs while leaving some in place, but more importantly, the talks will continue, and they've created a mechanism for dispute resolution, whatever that means. Details are still kind of scant. There will be more discussions, more press conferences, I'm sure, throughout the course of the day. But look, the market is majorly risk on this morning because of that news. We've got stocks are obviously ripping. Bonds are down. Yields are higher. Scott Bessent just can't catch a break on those lower interest rates that he really wants. We got yields moving higher again. That's worth keeping an eye on. Higher borrowing costs could potentially be bad news for the economy. Well, they are bad news for the economy, but let's admit it, guys, this trade breakthrough trumps that news for now. We've also got gold is way down today. The U.S. dollar is way up today, reversing that sell America trade. The world is buying America along with everything else this morning. European stocks are up. Asian stocks are up as well. But a severe strengthening of the dollar. We're seeing that trade like the USD JPY chart. That is ripping higher this morning as fears of the yen carry trade unwind or are temporarily abetting this morning. So look, it's good news. Take the win. It could have been a lot worse, right? We could have come away from that meeting with 250% or 1,000% tariffs. No, that's not what we got. They're heading lower. Now, I would point out, guys, that maybe the market is getting a little irrationally exuberant on this news because there are still tariffs in place. They are still pretty high. And look, let's face facts. We are one Truth Social post away from going right back to where we were. But for the time being, we have stepped back from the brink. Take the wind. Take the win, if you will. Look, and it's not just trade talks. India and Pakistan has agreed to a ceasefire over the weekend. Things were getting pretty hairy there. There was a big aerial battle was being fought over the Indo-Pakistani border. Missiles were flying. There was talk earlier this weekend of a ceasefire, and then parties came out and said, no, we didn't agree to a ceasefire. And, oh, this is fake news, and that's fake news. And, guys, there is so much fake information floating around about this India-Pakistan conflict. But for now, they're not shooting. And for at least the last day or so, half a day, the ceasefire, the truce is holding. So that's good news. Look, even the Kurds, there's good news between the Kurds and Turkey. The Kurdish party is disbanding in Turkey, and they're going to stop this 40-year-long insurgency against the Turkish government. Probably has something to do with some kind of deal has been reached in Syria now that the Assad regime has fallen there. But even in parts of the Middle East, we're seeing multi-decade-old conflicts are simmering down here. So, I mean, this is a really good day here, guys. There's a lot to celebrate here. Now, here's one that I've got mixed emotions about. President Trump is issuing an executive order on drug prices today. He released a lengthy Truth Social post with lots of all caps in his typical style. But what it boils down to is the United States is going to force drug companies to charge American consumers the lowest price they charge anybody else. Now, I have mixed feelings on this. Number one, that's price controls. When the government tells a company what they're allowed to charge, I don't like that. That's price controls. Price controls almost always, or we'll say they always lead to shortages. Now, that being said, let's talk about drug prices. That thing we haven't really been talking about, or that everybody's talked about but done nothing about. For the last few decades, the United States has been single-handedly shouldering the burden for R&D costs for pharmaceutical companies. American consumers have been paying out the wazoo for this stuff, while the rest of the world paid less and then looked down their noses at Americans like, oh, your healthcare system is so barbaric. Well, that's because your countries had price controls in place and ours didn't. And so we just raised the prices to offset selling the medicines to your country at a loss. President Trump's executive order is supposedly going to disallow that. Now, what's the end result of this going to be? I don't know. It depends on the details, and there are a few details on this right now. Maybe this results in medicine shortages, and it would be a freaking disaster. Or maybe this results in the rest of the world having to pay more so Americans can pay less. In which case, feel free to, fill out a comment card and drop it in the box. And your feedback is important to us. Boo-hoo, carry on. That being said, at the very least, we're seeing some movement on drug prices here. Again, it's going to come down to how they implement this before we see if it's going to work or not. I could go either way on this one. We've also got some news about Project Stargate. Stupid, terrible name. SoftBank and OpenAI and Oracle. Remember that silly press conference? All these new data centers. Well, actually, they were data centers that were already construction. They just put them in a box and called it Stargate. Well, SoftBank has some bad news this morning. They're saying, due to tariff fears, we're having a hard time getting any of these projects underway. By tariff fears, maybe you mean SoftBank never actually had the $100 billion that they promised to spend, and they're having trouble raising it. But go ahead, blame it on tariffs. Sure, whatever you got to do. We knew you didn't have the money all along, SoftBank. That's okay. Your secret's safe with us. I definitely won't go on the air and talk about it. That's for sure. We've got Coreweave is raising another $1.5 billion of debt. Not to refinance their old debt. No, they just need it to survive. The financial degeneracy that is Coreweave continues this morning. We were talking about that on Friday on my Patreon Zoom. Shout out to my magnanimous melonheads. Nissan layoffs are now up to 20,000. They're increasing the layoffs this morning. Things at Nissan are really bad. Things at all Japanese automakers are really bad. Not just the U.S. tariffs, also the surge of electric vehicles in China appears to be particularly painful for those Japanese automakers. And we've got a lot of news going on this morning about phones in China. Foreign cell phones shipments are way down in China, namely iPhone. And we've got Apple is raising their prices, but they won't say why. Why won't Apple tell us why they're raising their prices? We all know why they're raising their prices, but they don't want to tell us why. Stick around to the end of the show. That's kind of an interesting story going on over there at Apple this morning. Guys, we have so much to talk about today. Let's shrink my big melon of a head and see what's happening in the world. Don't forget that like button and that subscribe button for the YouTube algorithm, because we do this every morning. So come on back and have your coffee with the melon heads tomorrow. And right now, the S&P is looking great here, right around the highs of the morning, up almost 3%, 168 points in the green for the S&P. And look at that Dow, 1,033 points higher, 2.5 points up. They're 2.5% up for the Dow this morning. It is ripping here at the open. I don't know if this is going to hold or not. It seems like the market may be getting a little ahead of itself. I mean, look, we'll talk about what the tariffs are actually going to be in a second here. I'm glad things went well at the trade talks. They went better than anybody could have possibly hoped for. But 1,000 points up? Wait until you see what the tariffs are. Then you tell me. NASDAQ, meanwhile, 772 points higher. Almost 3.9% higher this morning. The NASDAQ is ripping on this news. And the dollar is ripping on this news as well. Look at the DXY, 101.57, $123 basis points higher for the U.S. dollar this morning. That whole sell America trade has done a 180. That money is turned around and it's heading right back here. They're buying dollars in order to buy U.S. assets. And you can see it in the USD JPY chart, the number of yen it takes to make $1. That is higher by 2.6 yen this morning at 147.97. It was over 148.5 at one point. Look, let's zoom out a little bit. Looks like a little bit of a double bottom maybe put in here on the yen chart. So we'll keep an eye on that one. For now, the yen carry trade risk, at least for now, is somewhat subsided. And then looking over at the bond market, watch out for this one. This is the only thing that could put a damper on this rally this morning. Interest rates are surging here, especially in the middle of the yield curve here. Remember, we got a debt-based system, hopelessly indebted system. So higher interest rates, not good for that here. People are selling bonds and they're buying riskier assets. We've got the 30-year treasuries at 4.891. That is up almost 6 basis points. The 10-year, 4.468, up 9 points and change. The 2-year is up 11.7 points, almost 12 points higher on the 2-year, right back at 4.00. And even the 1 month is up a half a point at 4.303. Bonds up across the board. Watch those interest rates. They're rising pretty much everywhere in the world. And looking at the commodities board, gold is getting crushed here this morning, although it is somewhat off the lows, but still a rough morning for the shinies. Down $85, $86 now lower for spot gold, $3,238.75. That's off by 2.6%. Silver is also down here, although silver's holding up pretty good. That industrial demand, maybe seeing a little bit of enthusiasm about an economic recovery, offsetting the decline of the monetary demand. $32.66 for spot silver. That's lower by about 6 cents or 0.17%. I still like the shiny. Copper is a little bit lower. I'm surprised to see copper lower here. Maybe a little bit of fears easing about the Chinese copper tariffs. That's down by about a penny here for copper futures. We've got platinum is lower by 2%. Palladium is lower by 2%. And crude oil is having a great morning here. $63.08 for June WTI futures. That's up by $2. 3.38% higher for crude oil. Now, interestingly enough, Bitcoin is not really moving here. I'm very surprised to see this muted reaction in Bitcoin. Bitcoin has been pretty weird since this whole tariff thing started. For a while there, Bitcoin was almost suggesting like it wanted to behave like a safe haven asset. And then for a while there, Bitcoin was back to being a risk asset. This morning, Bitcoin can't make up its mind. It's pretty much flat. It was up over the weekend, a couple of bucks. It's at 104,292. I mean, we're at levels we haven't seen since January. So Bitcoin has had a really good couple of days. It was ripping on Thursday, but not really moving here while everything else is rallying and gold is selling off. Bitcoin's just like, I don't know what I want, right? It's like asking the wife what she wants for dinner. I don't know. What do you want? That's what Bitcoin's saying to the market here. $136 higher. We were at a high of about 105,800 at one point this morning. But for now, it's looking pretty good. MicroStrategy, by the way, they were up buying again over the last week. From May 5th to May 11th, MicroStrategy bought 13,390 Bitcoin at an average price of $99,856. That's a total of $1.34 billion. So Michael Saylor is still engaged in his infinite money glitch. Maybe that had something to do with that big spike that we saw last week. That is a lot of liquidity being pumped into Bitcoin. All right, let's talk about the tariffs now and the specific numbers involved. U.S. and China to slash tariffs during 90-day reprieve for talks. All right, now let's right away put the asterisk on this enthusiasm, that 90-day reprieve. All right, the tariffs aren't gone. They haven't been permanently lowered. We're for 90 days while we continue to talk, we're lowering the tariffs. That's important. The U.S. and China will temporarily lower tariffs on each other's products in a dramatic ratcheting down of trade tensions that buys the world's two largest economies 3 months to work towards a broader agreement. The combined 145% U.S. levies on most Chinese imports will be reduced to 30%, including the rate tied to fentanyl by May 14th, while the 125% Chinese duties on U.S. goods will be dropped to 10%, That's according to a joint statement from officials in a briefing on Monday in Geneva. Now, it's also important to note that's a joint statement. Both countries agreeing to the same text on the same page. How about that? Now, look, the market, let's take a step back for a second. The market is up 1,000 points on 30% tariffs on Chinese goods. Take a second to appreciate that. And, we kind of talked about how President Trump has this flamboyant style and how first he creates chaos and he says these crazy things and everybody's like, oh, he's a madman. And then he uses that chaos as a currency to manufacture his own leverage out of thin air. It is an incredibly reckless negotiating tactic, but it's working here, or at least it appears to, because the market is up 1,000 points on 30% tariffs for 90 days. 30% tariffs up until about 2 months ago would have been viewed as insane. And now the market is rallying on this news. It just goes to show you how expectations can be massaged into place to where people celebrate a 30% tariff. And the Chinese are still keeping a 10% tariff on our stuff. So it's not like all the tariffs have gone away. The trade war isn't over, but this is still a very big de-escalation because the starting point was that 145% obscenely high level. So now it looks really good here. We're in agreement that neither side wants to decouple, Treasury Secretary Bessent said, adding that we had a very robust and productive discussion on steps forward on fentanyl and that talks might lead to China buying more American-made products. We would like to see China open to more U.S. goods, Bessent said. We expect that as the negotiations proceed, that there will also be the possibility of purchase agreements to pull what is our largest bilateral trade deficit into balance. So they're trying to close the trade deficit here. All right, there's a lot of hopeful, wishy-washy statements. Bessent added that the tariff reductions don't apply to sectoral duties imposed on all U.S. trading partners and that tariffs applied on China during the first Trump administration remain in place. Asked what would happen at the end of 90 days to avoid tariffs ratcheting back up, Bessent indicated that there's a chance to extend the truce further. Now, that last sentence is pretty important. There's a chance to extend this further so that 90 days is not a drop-dead date. As long as we're still at the table, as long as we're still making progress and both sides are showing good faith, 90 days is not a hard out here. We could potentially extend this beyond that. So, look, the auto tariffs are going to stay. The steel tariffs are going to stay. We're still at 30% for their stuff. They're still at 10% for our stuff. So we're not out of the woods here, guys. But, man, versus Friday, it's obviously a huge improvement. So let's take the win, shall we? Also, another case of just take the freaking W. Indian Army says talks with Pakistan's military operations chief are delayed, but they are talking. They are in a ceasefire, right? So they were supposed to talk this morning. It looks like they're not going to get together until this evening. We don't know why, but they are talking here. India and Pakistan have delayed until Monday evening talks between their military operations chiefs to discuss the next steps after a ceasefire, the Indian Army said, as New Delhi reopened airports and shares rose in the nuclear-armed rivals. There were no reports of explosions or projectiles overnight, with the Indian Army saying Sunday was the first peaceful night in recent days along their border, although some schools remain closed. Saturday's ceasefire announced by U.S. President Donald Trump followed 4 days of intense firing between the two sides and diplomacy and pressure from Washington. Hindu-majority India and Muslim Pakistan both rule part of the Himalayan region of Kashmir, but claim it in full. India's military sent a hotline message to Pakistan on Sunday about what it called its neighbors' ceasefire violations the previous day, flagging New Delhi's intent to respond to further such incidents, a top Indian Army officer said. A spokesman for Pakistan military denied any violations. In spite of some minor damage, all our military bases and systems continue to remain fully operational, India's Director General of Air Operations told a media briefing. So this truce was announced on Saturday. By Sunday morning, it looked like there was already some potential violations, or like maybe the ceasefire was off. It looks like it's managed to hold here. Again, it's really hard to get accurate information about this conflict because there's so much BS and propaganda on social media. But they're talking, and despite some earlier hurdles, it seems like the ceasefire is holding for now. Let's take the win. Hopefully we have productive talks later in the day. And look, even this one, shout out to my moderator, Mish, who caught this one. I mean, this story's not even getting really mentioned anywhere in the mainstream press. But Kurdish militant group PKK says they're disbanding and ending the armed struggle. The Kurdistan Workers' Party, or PKK, on Monday announced its dissolution, saying it was ending its armed struggle against the Turkish state and drawing a line under its deadly 4-decade insurgency. A 40-year-old armed conflict in Turkey between the Kurds and the Turkish government. It's over, or it appears to be over. The PKK is disbanding. I don't know what spurred this big deal between Turkey and the Kurds. I do know Turkey has become one of the main power brokers in Syria ever since the collapse of the Assad regime. So I would imagine some kind of gift, something has been given to the Kurds by the Turks. My guess is it's autonomous control over large swaths of what used to be Syria are now going to be given to the Kurds for control there. Whatever it is, again, hey, you got a 40-year-old conflict is going away. It's a pretty good morning, all right? Everybody find some wood to knock on, stat, because somebody's going to screw this up. But for now, things look like they're going pretty well here. And now we've got Trump's vow to cut U.S. drug prices drags pharma stocks lower. We've got stocks are up pretty much across the board today, but the biotechs and the pharma names are not participating in this rally. And it's because of this executive order by President Trump, who said he plans to order a cut in U.S. prescription drug costs to bring them in line with other countries, spurring a drop in pharmaceutical shares worldwide. Trump said drug prices will be cut by 59% plus in a social media post on Monday. That is according to the Department of Arbitrary Numbers. Over the weekend, Trump vowed to sign an executive order in Washington to institute what he called a most favored nation policy, mandating that Americans pay no more than people in countries that have the lowest price and promising a 30 to 8% cut in drug prices. But we have few details. Americans pay the most in the world for medicines, funneling billions of dollars a year into an industry that says it depends on the U.S. money spigot to drive growth and the development of breakthrough therapies. Trump doesn't discount that theory, but said it meant that the suckers of America ended up bearing those costs for no reason whatsoever. And look, that is an accurate statement. America has been shouldering the R&D cost for the whole world for decades. He said he wants the U.S. to pay the same price as the nation that pays the lowest price anywhere in the world, predicting that pharmaceutical prices could drop in the U.S. Trump also said prices would likely rise throughout the world in order to equalize, and for the first time in many years, here's a Trump statement, bring fairness to America. So, look, I don't know how he's going to do this other than Medicare and Medicaid are going to have to negotiate prices with the pharma companies, in which case Medicare and Medicaid is something like 60 to 80% of the U.S. pharma market. Don't quote me on that number. I'm just kind of grabbing it out of thin air. But Medicare and Medicaid determine the prices for drugs in the states. And if they are going to say Medicare and Medicaid are only allowed to pay the lowest price that the rest of the world is paying, well, that means these prices in the U.S. are going to drop substantially, or it could mean the prices overseas are going to rise substantially. My guess is a little bit of both, and they meet in the middle, which, hey, that's fair. But at the same point, can he just do this? Can a president via executive order just arbitrarily declare lower drug prices? I don't know that he can do that. I'm sure somebody's going to challenge this in court. I'm sure Big Pharma is going to take him to court. And you could probably find some judge somewhere that's going to rule and strike this down. So for now, I don't, it's not going to affect drug prices tomorrow. We'll see what the details of this executive order say. There was some, Mish was mentioning while we were talking this morning that it looks like Secretary Kennedy is going to be in charge of this. So maybe the details are coming out as I'm talking here. But for the time being, it looks like the pharma stocks are down pretty big here. We got 1.3% lower for Eli Lilly. That is off its lows of the morning. It was down about 3% earlier today. We've got Merck is essentially flat here, down. Well, it's about to go positive, it seems. This was down 1% and change a few minutes ago. And we've got Pfizer is down a fraction of 1%. So even these pharma stocks, they're off their lows of the morning. So maybe they've kind of walked back the rhetoric on this one a little bit. All right, let's switch over to AI. SoftBank's Stargate venture with OpenAI hits snags on tariff fears. If by tariff fears you mean they never really had the money, well then, yeah, that's what's going on. SoftBank plans to invest $100 billion in artificial intelligence infrastructure in the U.S. have slowed, with economic risks stemming from Washington's tariffs holding up financing. SoftBank founder Masa Son and OpenAI founder Scam Altman unveiled the Stargate project in January with promises to begin deploying $100 billion immediately and raise that to around $500 billion over time. More than 3 months later, SoftBank has yet to develop a project financing template or begin discussions with banks, private equity investors, and asset managers. Now, I just want to scroll down a little bit here. Stargate backers include Oracle and Mubadala's MGX. SoftBank is also courting banks and debt investors, including pension funds and insurers, on a project-by-project basis. I couldn't help but notice pension funds. Why is it always pensions? Why are they always parking this crap in grandma's pension? That's where this stuff always ends. It's like the dumping ground for the worst toxic sludge in Wall Street and Silicon Valley. Now, look, the takeaway here is SoftBank doesn't have the money. They never had the money. And now they're having a hard time convincing pension funds and insurance companies to hand over grandma's money, which means SoftBank can't build all these data centers. There's questions about whether they're really needed. Microsoft is scaling back their data centers, so is Amazon. So SoftBank, you can add that to the list. And speaking of data centers, we've got Coreweave is now in talks for another $1.5 billion in debt just 6 weeks after their IPO. No, this is not the same story I was talking about on Friday morning's live stream. That was a different $1.5 billion in debt that Coreweave was taking out. That was a line of credit that they were expanding by about $860 million. This is another $1.5 billion in bonds that they're trying to issue. Why? Because Coreweave is run by financial degenerates, and this company cannot hope to survive without an endless flow of more and more debt. Less than 2 months after a heavily scaled down initial public offering, Coreweave is in discussions to raise about $1.5 billion in debt, according to a person with knowledge of the matter. The potential offering is expected to be in high-yield bonds and led by JP Morgan Chase, according to a different person. The AI cloud hosting company has been holding virtual fixed income investor meetings since Tuesday, with the final one taking place Friday at noon, said another. By the way, virtual fixed income investor meetings, that's another way of saying pension funds. They're trying to park grandma's pension in this crap. Proceeds from the possible debt offering won't be used for refinancing, one of the people said, which means they need this money to survive, to keep operating. Coreweave is targeting an investment grade rating in 3 years. Yeah, good luck with that one. Look, guys, this company is a zero in the long term. It's all in the S1 for anybody who bothers to decide to read it, or you could just, read talking points on Twitter and buy the stock aimlessly. Sooner or later, Magnetar is going to end up taking everything from this company. It is built into the company's founding documents. It's all there, laid bare in the S1 for anyone who bothers to read it. Meanwhile, Nissan job cuts double to 20,000 in huge overhaul, NHK says. More trouble for Nissan this morning. Nissan will eliminate 11,000 more jobs than previously planned, NHK reported on Monday, as part of a plan to restructure its flailing business. The Japanese car maker said in November that it would cut 9,000 positions after weak sales in the U.S. and China led to a 94% drop in first-half net income. But now those jobs will be closer to 20,000, or around 15% of the entire workforce, according to Japan's national broadcaster. The redundancies will occur both at home and overseas, it added. Look, guys, we talked about autos in that interview with Laks Ganapathy from Unicus Research last week. There is big trouble coming in the auto market, and particularly the auto finance market. Nissan seems to be one of those automakers that is most vulnerable here. 9,000 layoffs, now going to 20,000. Things are pretty bad in the car market. And things are looking pretty hairy in the phone market this morning also. This one in Reuters. China's March shipments of foreign-branded cell phones dropped by almost 50%. Now, this is interesting because China's shipments of foreign-branded cell phones increased by double digits last month, but now they've been cut in half. And keep in mind also, this is March data, so this predates the Liberation Day and all that nonsense, which probably didn't help foreign iPhone sales one bit. Chinese shipments of foreign-branded cell phones, including Apple's iPhones, dropped by 49.6% year over year in March, according to data released on Monday by a government-affiliated research company. Calculations based on the data that the China Academy of Information and Communications Technology showed that March shipments of foreign branded phones in China decreased to 1.887 million units, down from 3.747 million a year earlier. Big drop in iPhone sales in China, or iPhone shipments to China, which of course means sales. And then we got this one from Wall Street Journal this morning. This is an interesting article. Apple considers raising iPhone prices without blaming tariffs. China still leads production of high-end models, exposing the company to trade risk. Apple is weighing price increases for its fall iPhone lineup, a step it is seeking to couple with new features and design changes. Hopefully those new features will actually work and they won't just advertise them and then be like, oh yeah, they don't work 6 months later. The company is determined to avoid any scenario in which it appears to attribute price increases to U.S. tariffs on goods from China, where most Apple devices are assembled, the people said. That had me kind of scratching my head. Why don't they want to admit that a tariffs is the reason why they're raising the prices? Well, the people familiar with the supply chain said Apple would have trouble making up for China's tariff costs solely by seeking further savings from its suppliers, meaning a hit to its profit margin was likely unless it could raise prices. At the same time, company executives are wary of blaming increases on tariffs when a news report in April said Amazon might show the impact of tariffs to its shoppers. The White House called it a hostile act, and Amazon quickly said the idea was never approved and was not going to happen. So it looks like Apple is trying to avoid the Amazon effect here. The tariffs are forcing them to raise their prices in order to maintain their margins, but they don't want to say that because everybody was so pissed at Amazon a few weeks ago when they rolled out their tariff line item on their checkout bills, which was not necessarily dishonest, but it was viewed as a political statement, and there was a lot of backlash on Amazon got from that. So Apple wants to avoid that, so they're just going to raise the prices and not say why, even though we all know why they're doing it. They're not telling us why they're doing it. Apple stock, though, is ripping this morning. The opening bell has rung, and Apple shares are up $10, 5% higher, $208.37, driven almost entirely by that breakthrough in the trade. And it looks like the market is, for the time being, overlooking that big decline in foreign shipments for cell phones in China. And I just want to say thank you very much to Russ S., the beekeeper. What's going on, Russ? He says everybody is smoking the hopium. You better believe it this morning, man. They are smoking that big time this morning. Look, it was good news, Russ. I mean, 1,000 points on 30% tariffs. Also, I would add that before that happened, the market was already higher than we were before April 2nd. So now we're 1,000 points higher than we were on April 2nd on 30% tariffs. Is that really good news? Let's pretend Liberation Day didn't happen. Let's pretend it's April 1st, and then we wake up on April 2nd and the tariffs are 30%. Would the market have rallied on that news? Almost certainly not. Definitely not. So I agree. The hopium doth smoke this morning. That being said, forget the market reaction for a second. This was all good news today, right? The India-Pakistan thing, the Kurd-Turkey thing. I mean, a 40-year-old armed conflict coming to an end. Take the win. The trade war, things could have been a lot worse in Geneva. They could have gone a lot worse. For a second there, it looked like they were going to be a lot worse. And that didn't happen. So, yeah, I agree. I think 1,000 points up is probably a bit excessive here. But let's take the win. I think that's the takeaway here. Thank you, Russ, for supporting the channel, for being a Melonhead for 11 months. And Nashville Pasta Man, what's going on, brother? Thank you for the super chat. He says tariffs aren't paid for by buyers, just like real estate commissions aren't paid for by buyers. I think there's a wink, wink involved here. Cars aren't selling because of tariffs. Nope, people are broke. I do agree with that. Look, the tariffs, if anything, the tariffs caused a little bit of additional car buying in the prior few months. My buddy Tommy from Car Concierge Plus came on the channel a few months ago, and he said, like, look, we're seeing car prices start to rise. We're seeing people are afraid of these auto tariffs, and so they're starting to buy now for fears of higher prices. So if anything, if you're looking backwards only, tariffs have driven additional auto sales. That being said, tariffs, once they arrive, obviously not going to help things. And I think now, I agree, consumers are broke. You can see it in the delinquency data. You can see it in the repo data. You could see it in what Laxkanapathy said in that interview with the Unicus Research CEO. Auto finance is a mess. I agree. People just can't afford cars. And much like the housing market, that repossessed inventory is being withheld from the market in order to avoid taking losses on the debt, which is artificially keeping prices higher, which means when that finally corrects, you're going to see a bullwhip reaction. I agree. People aren't buying cars because they're broke. Tariffs are not going to help. For now, though, the tariffs are lower. Again, it's a take the win kind of day. Thank you, Pasta Man, for supporting the channel, sir. And Bob Stapleton, thank you for supporting the channel. Oh, Bart Stapleton. I'm sorry, Bart. Don't take that the wrong way. Sorry, I called you Bob. He says, your interview with Lux Ganapathy is one of the most comprehensive and revealing discussions of the current and forthcoming state of the economy. Great job, Lux and Jack. Thank you so much, Bart. I appreciate that very much. And by the way, thank you to everybody. Very good feedback on that interview with Lux. Some of the nicest comments that you guys have ever made on any interview. So I really appreciate that very much. And I agree, Lux was really sharp. I was very impressed with her. We spoke on the phone for a couple of hours a day before that interview. It was a really good conversation. I think she's talking with Melody right now, so we may see Lux and Melody doing some work together also in the future. I hope I didn't just piss somebody off by leaking that early. Sorry, I'm me and my big mouth. But yeah, Lux, I was very impressed with her as well. She's got great data, a very unorthodox approach to research, but she kind of through a roundabout way got to the same place that I did, especially zeroing in on auto finance and buy now, pay later. Those are two things that I've kind of been looking at in my channel for a while now. So thank you, Bart, for the super chat, the support of the channel, and for the kind words. And thank you, everybody, for having your coffee with the melon heads. Look, the world is singing Kumbaya for now. Let's enjoy it. We're one Truth Social or Twitter post away from going right back to the way we were. So for now, everybody ride that rocket. Have an awesome day. Thank you so much for the super chats and support of the channel. Thank you also to my magnanimous melonheads on Patreon and YouTube. You guys are awesome. Links down below should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.